At XRP Insights, we're used to market rumors, the kind that ripple through trading floors and spark heated debates among analysts. Most whispers fade away, dismissed as noise in the relentless churn of financial news. But every so often, a rumor emerges that feels different, one that makes even the most seasoned experts pause and reconsider what they know. Sometimes a single whisper can change everything. It can ignite curiosity, fuel speculation, and set off a chain reaction that no one saw coming. Recently, a leaked IMF document surfaced, allegedly revealing a radical contingency plan, one that could rewrite the rules of global finance as we know it. According to the document, if the old financial system were to collapse, XRP, not gold, or the US dollar, could be positioned as the new backbone of international settlements. This idea is nothing short of revolutionary. The mere suggestion that the IMF might consider a digital asset like XRP for global settlement sent shockwaves through the financial world. Traders, investors, and institutions scrambled to make sense of what this could mean for the future. For decades, gold has been the ultimate store of value, a symbol of stability and trust. But in today's fast-paced, interconnected world, the gold standard is slow, costly, and increasingly outdated. The system simply can't keep up with the demands of modern finance. This rumor forces us to confront a hard truth. The current financial system is broken, plagued by inefficiencies and vulnerabilities that can no longer be ignored. Central banks and financial institutions around the world are desperate for a faster, more neutral way to move money across borders, one that isn't tied to any single nation or outdated technology. Enter XRP, a digital asset engineered for speed, efficiency, and reliability. It promises near-instant settlement and global reach, making it a compelling alternative to legacy systems. The alleged IMF report didn't just mention XRP, it modeled it as digital gold for the 21st century. A new standard for value and trust in a digital age. If this is true, it signals a seismic shift in institutional thinking. The old guard is finally waking up to the potential of blockchain technology as the foundation for a new global economy. One that's more transparent, efficient, and inclusive. The whisper has become a roar. The world is watching, and everyone's listening, because the future of money might just be changing before our eyes. For thousands of years, gold has been the ultimate symbol of wealth and security. Empires have risen and fallen with gold at their core, and for centuries it was the backbone of global trade and finance. But today, the very thing that made gold so valuable, its physical, tangible nature, has become its greatest weakness in a rapidly changing world. Moving gold across borders is not just slow and expensive, it's fraught with risk. Every shipment requires armored vehicles, strict security, and complex paperwork. In an era where information and money can travel the globe in milliseconds, gold's reliance on physical transport feels like a relic from another age. Imagine trying to settle massive trade imbalances by physically shipping tons of gold from London to Beijing. The costs, insurance, and logistics are staggering. It's a process that simply can't keep up with the demands of modern commerce, where speed and efficiency are everything. Today's global economy operates at digital speed. Trillions of dollars move through financial markets every day, and transactions are settled in seconds. Gold, by contrast, is slow and cumbersome, unable to match the pace of digital finance. Even the US dollar, long the world's reserve currency, is facing new challenges. As nations look for alternatives that aren't tied to any single country, the need for a truly neutral settlement asset is growing. Gold's limitations are even more obvious in today's world of high-frequency, high-volume transactions. It simply can't handle the scale or speed required by modern markets, making it impractical for everyday use in global finance. Central banks and financial institutions are searching for an asset that combines gold's neutrality and trust with the instant speed of digital communication. The world needs a settlement tool that works at the speed of the internet. Yet, the current system still relies on outdated protocols like SWIFT and telex machines, technologies that were revolutionary in their time, but now struggle to keep up with the demands of global finance. This is why the search for a better solution is leading central banks and governments to explore digital assets and blockchain technology. These innovations promise faster, more secure, and more transparent transactions. With digital assets, value can now move across continents in seconds, not weeks. The barriers of distance and time are disappearing, opening up new possibilities for global trade and finance. Gold's reign as the world's primary settlement asset isn't over just yet, but its dominance is under serious threat. The world is moving on, and gold is struggling to keep pace. As the financial world evolves, it's clear that a new standard is needed, one that can match the speed, scale, and complexity of modern finance. That's why digital assets are now in the spotlight, offering a glimpse of the future of money and global settlement. What is XRP, and why is it making headlines in the world of finance and technology? To understand XRP, let's first look at the problem it's trying to solve. Every year, trillions of dollars are sent across borders, but the process is slow, costly, and outdated. Sending money internationally today is like a slow, expensive road trip, multiple stops, fees, and delays. Banks and payment providers rely on old systems that can take days to move funds from one country to another. XRP is designed to be a teleportation device for value. Imagine your dollars instantly converting to XRP, zipping across the globe in seconds, and then converting to yen or euros almost instantly on the other side. The process is nearly instant and costs a fraction of a cent, making it far more efficient than traditional wire transfers or remittance services. XRP acts as a bridge currency, enabling what's called on-demand liquidity. This means banks and payment companies don't need to pre-fund accounts in foreign countries. Banks no longer need to park trillions in dormant accounts worldwide, freeing up huge amounts of capital that can be used elsewhere. This not only slashes costs, but also allows financial institutions to operate more efficiently and invest in growth. Unlike many cryptocurrencies, XRP wasn't built for speculation or hype. It was specifically designed to solve the cross-border payment problem for banks and institutions. Its speed, scalability, and extremely low transaction costs make it unique among digital assets. The XRP ledger can handle 1,500 transactions per second, with settlement times of just a few seconds, making it a serious contender for the backbone of global finance. So, XRP isn't just another coin. It's a potential foundation for the future of financial infrastructure, aiming to connect banks, payment providers, and people worldwide. That's why major organizations like the IMF and central banks are watching XRP closely, considering its role in the next era of global finance. The rumored IMF document goes further, outlining a new global financial system built on a distributed ledger. In this vision, a neutral bridge asset, XRP, would settle transactions between central bank digital currencies. Imagine digital dollars, euros, and yuan trading seamlessly, with XRP as the universal translator. No country would need to hold another's currency, just XRP for a few seconds. XRP becomes digital gold, not just stored, but moving value instantly. Its decentralized nature ensures no single entity controls it, making it politically neutral. The scale is massive. Trillions in global trade could settle through this system. For XRP to handle this, its value per unit would need to rise dramatically. The IMF's alleged modeling isn't about a $1 XRP, it's about a digital asset securing the world's economy. The push for a new system isn't just theory, it's geopolitical reality led by BRICS nations. BRICS wants to escape the US dollar's dominance and create a fairer, multipolar financial world. Building a new currency is tough, but adopting a neutral, decentralized asset like XRP is far simpler. XRP offers instant, politically neutral settlement, perfect for nations wary of US influence. BRICS could settle trade directly, bypassing SWIFT and the dollar entirely. This isn't just about efficiency, it's about sovereignty and independence. The IMF must plan for a future where the dollar isn't king. XRP aligns perfectly with BRICS goals: speed, low cost, and neutrality. The alleged IMF report may simply be recognizing this inevitable shift. XRP stands as a prime candidate for powering the next era of global trade. It's vital to separate XRP, the asset, from Ripple, the company. The XRP ledger is decentralized. XRP is the value. Ripple builds the tools for institutions to use both. Ripple's mission: make money move as easily as information. They've built partnerships with hundreds of financial institutions, focusing on real-world problems, not hype. Their on-demand liquidity service is a turnkey solution for banks. Ripple's regulatory victories, like the US court ruling that XRP isn't a security, are paving the way for adoption. Institutions need legal clarity, and Ripple is delivering it. The IMF and BRICS aren't just looking at code. They see a robust global ecosystem ready for prime time. Ripple's decade-long strategy is converging with the world's need for a new financial engine. Finance runs on confidence and precedent. Institutions have hesitated, but a tipping point is near. When a major player, central bank, commercial giant, or the IMF, adopts XRP, it will validate the technology overnight. This will trigger a cascade. Other institutions will rush to adopt or risk being left behind. XRP's value will shift from speculation to utility, driven by real demand from global finance. The price will reflect its role as a core settlement asset, not just a speculative token. More importantly, global payments will become instant and cheap, unlocking growth and democratizing finance. The first domino won't just boost XRP, it could transform the entire financial system. The world is watching for that first move. We're at a crossroads. Old systems are straining, and whispers of a new digital architecture are growing louder. The alleged IMF leak has forced a shift from hype to real utility. XRP and Ripple have spent a decade building, and now the world's needs are aligning with their solution. BRICS's push for neutrality, the need for faster payments, and the search for digital gold all point to XRP. The question isn't if, but when, adoption will happen. Watch for subtle shifts, quiet integrations, not just big announcements. The real value will be measured by utility, not speculation. Whether XRP becomes the new digital gold remains to be seen, but it's the leading contender. At XRP Insights, we'll keep connecting the dots as this revolution unfolds. The future of money is being written now. Stay tuned.